Good morning, everybody. It's Wednesday, February 13th, 5:25 a.m. Central Time. Grain markets are mixed this morning. March corn futures down 1.5 at 488 and 3/4. March soybeans up 1 at 1028 and 3/4. March Chicago wheat up 5 at 579 and a quarter. March Kansas City wheat up 7 and a quarter at 598 and 3/4. March spring wheat up 4.5 cents at 619 and a quarter. Mackenzie is off today, so I am solo. If you guys are newer to the podcast or to the YouTube channel, I did this by myself for years until I brought Mackenzie on a couple of years ago, and we'll see if I'm still any good at doing it by myself. To start off here, soybean futures fell sharply on Wednesday. The nearby March 25 contract lost nearly 16 cents per bushel and posted its lowest close since January 16th. Reports of big yields in Brazil, recent rainfall in Argentina, and a continually bearish global supply and demand situation have weighed on prices recently. Private groups estimate that large money managers were net sellers of 10,000 contracts on the day, but are probably still net long 40 to 50,000. Looking at this March soybean chart, if you guys are watching, this blue line is the longer term trend line that dates back to the December low. That's been busted. And when that was busted a couple days ago, the floodgates kind of opened and you saw some exaggerated selling. I still think that this area from, say, 10 and a quarter down to 10.15 or 10.20 is some sort of support zone. If you digest back into that range that we saw beginning, say, mid-November through early January, that would be very bad. I think we're back to trading some of the same old story. And what's the same old story? The same old story is that global ending stocks and the global supply and demand situation is extremely burdensome. To frame it in maybe a different light this morning, ending stocks for the world are projected at 124.3 million metric tons. That's equivalent to 74% of this year's Brazilian crop or Brazilian crop estimate, or 104% of last year's U.S. crop. So essentially what USDA is saying here is that at the end of the marketing year around the world, there's going to be an entire U.S. crop worth of soybeans left over. And that's bearish. There's too many damn soybeans out there. So the market is reverting back to trading a lot of the old bearish stories, in my opinion. Heavy rains hit Argentina, corn and soybean areas on Wednesday. The Buenos Aires Grains Exchange said that the rains brought relief to crops in some of the driest areas. They said this: the rains reached the extreme northwest of the region, a zone that had been left out of last week's rainfall, in which needed these millimeters of precipitation. USDA reduced its projection for Argentina's corn crop by 2% on Tuesday. The soybean crop projection was reduced by nearly 6%. In additional Argentina news, the Rosario Grain Exchange pegged the country's soybean crop at 47.5 million. USDA is at 49, and they pegged the corn crop at 46 million. USDA is at 50. If that corn number in particular was realized, that would help to tighten up the global corn balance sheets quite a bit. There was some rain here. This is an estimate of what we saw from the 9th through the 12th. So I believe what's that, Monday through Wednesday. Yeah, you had some rain in some key areas and some northwest areas, as mentioned by the exchange. Some rain on the radar here early this morning again. And the next 10 days in Argentina looks pretty wet for, call it, at least half of corn and soybean country. You look at some of these higher production density areas of Cordoba and Buenos Aires, they're going to be left drier over the next 10 days. But they caught some rains recently. So the situation in Argentina, I'd say, has stabilized at least. I still think the crops are going to be light relative to previous expectations just because it started so dry. The rains falling now are pretty timely. Soybean harvest in Argentina is typically like March through May. So the rains falling here in February are very much ideal as far as timing is concerned. President Trump and Russia's President Vladimir Putin spoke on the phone this week. Trump said that he and Putin agreed to begin negotiating an end to the war in Ukraine. This move would be, of course, a massive reversal in U.S. policy, which for nearly 3 years has sent massive aid to Ukraine in the form of cash, weapons, aid, all sorts of stuff. Trump said this: "We agreed to work together very closely, including visiting each other's nations," Trump said of Putin. "We want to stop the millions of deaths taking place in the war with Russia-Ukraine. President Putin even used my very strong campaign motto of common sense. We both believe in it very strongly." Trump also spoke with Ukrainian President Zelensky yesterday, as confirmed by his office. With regard to the wheat market, I saw it written in many places that an end to the war would be bearish wheat, and I don't understand that. Wheat prices have trended lower for more than 2 years while the war was ongoing. So why am I supposed to believe that an end to the war would be additionally bearish right now? My thesis, as you guys know, has been that if the war ends, it may actually be slightly positive for wheat prices, because if Russia has no more war machine to fund, they may stop selling wheat on the world market at bottom of the barrel prices. And maybe that's something that will help to support the market. We've also got some weather issues here. I mean, just on a separate note with regard to wheat, we've got some extremely cold temperatures in the U.S. plains that may impact the HRW crop this week. Russia's got its own weather problems. I think wheat's awfully cheap here. It's sub 6 on the board for Kansas City futures. If you guys are not a premium subscriber, you should be. We send out excellent information. The farm crowd is our main crowd. Most of our premium subscribers are farmers. But if you're in a related business, if you're an ag banker, if you sell crop insurance, if you are an implement dealer, any of those sorts of things, this would be really good for you. We did charts with Brian yesterday. He ran through corn, soybeans, wheat, cattle, cotton. Always has excellent stuff. Today's video is something that everybody should watch. And again, if you're a young farmer under the age of 35, yeah, you should watch Shay's Young Farmer video survey. But maybe if you're a middle-aged farmer, maybe if you're an older farmer, if I was an ag banker, I would 100% want to see this. If I was an implement dealer, I would 100% want to see this. If I was a seed dealer, fertilizer dealer, anybody that's selling things to young farmers, I would want to see this. But most importantly, our crowd is the farmer, and specifically in these videos, young farmers. We did a survey of young farmers and we addressed their concerns. What are their concerns? It's marketing, it's land acquisition, it's transition planning, a whole bunch of things. Shay and I was in this video also, ran through some of the questions that Shay highlighted in this video that's going to be out later today. It's not out yet. So if you're a premium sub, you didn't miss it. It's not out yet. We're also going to include the 200-something questions that came in as a PDF and Shay's answers to like all 200 questions. That'll be out later today at 10 a.m. Central Time. If you guys want to see the premium stuff, go to standardgrain.com, sign up this morning. It's a $50 per month subscription. Cancel it any time, no other fee, no other obligation. Nobody tried to sell you anything else. Just a ton of content that is super applicable to you and nothing else. Let's move on here. The Trump administration approved a loan for the expansion of an SAF plant in Montana. The plant at Great Falls, operated by Montana Renewables, currently produces 140 million gallons of biofuels per year. The Biden administration had approved an expansion loan on January 10th prior to Trump's inauguration. There has been widespread concern and uncertainty within the biofuel industry regarding the Trump administration and its general dismay for the Green New Deal and climate scams, as Trump calls them. U.S. Senator Steve Daines of Montana stressed to Trump that the expansion would help him toward his goal of U.S. energy dominance. And I really hope that these lobbyists out there, whether it's the ethanol lobby or the corn growers or whoever, I hope they are stressing exactly that to Trump, that biofuels can help Trump toward his goal of U.S. energy dominance. We can eliminate some of these imported feedstocks. We can help his base, which is the U.S. farmer is a big part of his base. So we hope that somebody is explaining that to the administration and that the policy follows. Consumer inflation was hotter than expected in January. Monthly CPI data released Wednesday indicated that inflation rose by 3% versus the same month last year. Traders had expected a print of 2.9%. Housing costs continue to be a problem. Food and energy prices were also higher. Traders expect the Fed to hold its key benchmark rate steady in March. The government will release wholesale inflation data, that's PPI, later this morning. So your 3% annualized percent change in this basket of goods and services is the highest since June of 2024. The Fed wants to see this thing at 2% or close to 2%, and you're not. It's going in the wrong direction. Just to put this into context, this basket of goods and services tracked by the government has risen 1,735% since January of 1925 over the last 100 years. Also, over the last 100 years, the U.S. dollar has lost somewhere between 95 and 98% of its buying power. So long story short, don't save your money in dollars. Long term, you need to own assets, whether that's farmland, stocks, gold, whatever it is. You don't want to own dollars. We had some flash sales yesterday. 130,000 tons of corn to unknown destinations, some soybeans to unknown destinations. Small sales, but good to see. Soybeans really are not competitive on the export market, so you're going to see minimal business here as we move forward. U.S. ethanol production declined last week. Weekly output 1.082 million barrels per day. That was off almost 3% from the prior week, down fractionally versus the same period last year. That was the first time weekly output was lower year over year since late November. Ethanol stocks were off just a little bit. With regard to production margins, they're negative across a lot of the Corn Belt. If you look at spot margins using spot prices of corn, ethanol, DDGs, inputs, we're like 10 to 20 cents negative. Now, every plant's going to be a little bit different, and plants hedge and they pre-buy, of course. So it's really difficult to say. But the production numbers have been great. And I actually would not be shocked if USDA came up a little bit with its projection for corn via ethanol. Cattle was mixed yesterday. Not a ton to talk about there. Outside markets, fairly quiet this morning. US dollars off. Stocks are up just a little bit. Bonds are up just a little bit. Gold's up $15. Crude oil down 92 cents at 70.45 in the March WTI. Have a great day, guys. We'll be back on Friday.